Buying vacation rental investments and how to get beach condo financing. Now, in other videos, you've heard me talk in depth about vacation rentals and condo investing and why it makes money. And you've also heard me talk in other videos about cash flow and cash flow properties, vacation rental investing, and what to look for, what to stay away from. And I'll have some of those links below so you can watch those. But in this video, I'm going to talk specifically about vacation rental investments, how to get them to work for you, and really one big question everybody has is resort property financing. So I'm Jerry with Jerry Pinkas Real Estate Experts here in sunny Myrtle Beach, South Carolina. I've been investing in real estate, in land, in resort and income and vacation rental properties for the last 36 years. So most of my properties that I've invested in during that time, they've been located either on the water or near the water. So I'm giving you actual experience, real life stories, what to avoid and how you can win. And my real estate team does this every single day. So first off, I just want to say thank you so much. I truly appreciate you watching. And the second thing is, if you hit the subscribe button, you're going to get access to hundreds of videos to help you that are here on this channel. So if you're ready, give me a thumbs up, okay? So here's the first thing is buyer demand has been super strong in resort areas. I don't know if you know this or not, but people seem to be migrating to the water, right? So people have been recently running entire vacation rental businesses right from their home. It's like their side hustle, their side job and side income. So, it's what I did for years on the side until I had enough cash flow and I was able to quit my full-time job actually. Years ago, I was able to actually move to the beach and just rent my properties. So as my business continued to grow, we expanded into the real estate sales side. So I still have vacation rentals and I love the income from these properties, but I have other people managing those properties now. So my companies have grown considerably from their humble beginnings. The other side of the business is the real estate sales. So as I said, my team of experts they continue to help thousands of people buy, sell resort properties here in Myrtle Beach, South Carolina. So how do you get started investing in vacation rentals, right? So most people, what they do is they'll start small. It'll be one property. They stick their toe in the water. They want to see how it works, see if it's going to be an issue. They're not going to get in over their head, right? So they use it a little bit themselves. They enjoy this lifestyle. And they also rent out their unit, while they're not using it. Now, we have many clients who have started with small units and parlayed from one to the next, and others that are actually doing this. Some people, it's like the game Monopoly in real life in many cases, because some people are making an Airbnb investment. They're doing those short-term rentals, and while they're still working, so they've got leverage. They actually have something else working for them while they're working. Now, here's a pro tip. Okay, you always want to check when you're doing Airbnb or VRBO, and you're doing it yourself. Always check with local zoning to make sure it's conforming in that area before buying, because we've had people that have come to us after the fact, the horror stories from newbies that didn't have an expert who was helping them. So I just want to, point that out. But if you've been thinking about doing this, if you've been thinking about buying a vacation rental or a second home, you're not alone, because I want you to think about the beach, for example. Okay, so look at all the condos that are on the beach. Okay. Someone owns each one of those. So there's a lot of people who are doing this. It's just a lot of people aren't talking about that, So, hey, did I say to hit that subscribe button yet? Is this helpful? Okay. Let's go ahead and hit the subscribe button. So, okay, so how are people buying? How are they doing this? Okay. How are they purchasing a vacation rental? Now, buyers in some cases are using home equity loans. Okay. They have a house, they've got equity in their loan house, they can write a check for it, or they're paying cash. Honestly, there's been a lot of profits made in real estate and in properties recently and over the years, and for that matter, the stock market has also made a lot of people money. So what they're doing is they're taking a little bit of money off the table, you've heard me say this before, and investing it, diversifying. or they're going to a hard money lender. This is a person who is actually lending money, just, lending to lender to lender, person to person. Or you may, you want to know about which local banks or which local lenders to use. Whatever specific area you're in, you want to go shopping in that area, your local expert can help you with that. But, it's always going to be specific to where you are a lot of times. Now, aligning a correct lender will help you avoid those pitfalls because, if you're with the wrong thing or the treadmill you're on and not getting any traction, currently, access to credit is going to limit a lot of second home buyers, honestly. Vacation rentals and even some of the primary home buyers across the country, may get dinged. Now, why is this? Okay. Banks aren't lending like it's 2005. Now, if you've been around for a while and you've thought about this and you've seen things, some people bought vacation rental properties back in the day with no money down, right? And you've heard this before. You've heard these stories. And what they were doing is they were trying to flip properties. As long as the market's going, and you have no skin in the game, you just flip the property and make a little bit of money, flip the property and all that stuff. But when that stops, then you lose property, okay? They were not looking at the rental business. They weren't using their head and looking at the full picture, okay? That's one reason why real estate had the meltdown in 2007 in resort areas, because people were way over leveraged, right? It's completely different today. One reason resort property business is so strong today too is because people are not over leveraged, okay? What I'm seeing here, what my team is seeing here is, better than half of the buyers are actually paying in cash. Now, I know it's kind of strange. It seems weird, but then other people, if they are financing, they're putting down 20, 25, 35%. They're putting a chunk down. So, but if you are financing, you do not need to do that. I'm just pointing this out. But if you are financing today, you do have to have skin in the game, okay? You got to have a solid, you got to be solid, you have good credit, you got to keep low overhead, you can't be over leveraged. You got to be living below your means, and you got to have steady income, because that's what a bank wants. They want a solid, if they're loaning money, they want solid, right? So vacation rental properties and beach condo financing is a little different than if you were going to the bank for your primary home where you live full time, okay? Now, what we're talking about here is second home or investment property. Banks look at everything that you don't personally live in 100% of the time as a risk. Why? It's outside your hands. You're not there all the time. So I want you to go in with your eyes open, okay? Getting a mortgage in a resort area is, especially for a vacation rental condo or something like that, is going to be tougher. It's not impossible, but there are things that you need to know. For instance, if you go to your hometown bank, somebody you've been banking with for years, they know you, you know them, first name basis even when you walk in. And you go in there and you say, hey, I want to buy a condo somewhere. They'll say, yeah, sure, no problem. But what they don't know is the condo, where it is, if it's a nightly rental, a vacation rental, that sort of thing. They generally, when you get 3 months into your deal, you've been trying to get closed and find out, or a month into your deal that you were trying to close and it doesn't close, I'm going to go further into this and you're going to find out why, okay? But I'm trying to help you to avoid these pitfalls. So the second thing would be, maybe people think I'm going to go to the big brand banks, okay? These are the name guys, the big guys. The reality is, on a lot of resort properties, if it is going to be used, it can be classified as a condo. Like for instance, if it's rented by the night, by the week, by the couple of nights, it's short-term rentals. This is completely different than a second home when you're not using it as a rental property at all, and it's not an investment property either. So it's a hybrid, I guess. But there are a handful of lenders, local people that are in whatever resort area that you're looking at, that know the area. They know the property. They know that building is over there. They know it's not going anywhere. It's been there for years. There's income coming from it. And they know all that. So that's why the local lenders tend to be a pretty good resource. Now, there's tighter requirements. So they aren't lending on small units. Okay, why? Because a lot of times if you don't have any skin in the game, a small unit, people pay cash for these types of things. A small condo, or square footage, if it's like an efficiency, okay? a 400 square foot or 600 square foot, something small, lower, okay? Or banks generally don't want a loan on $100,000 or less. There's not enough in it for them to go through the whole process to make money on it. They feel like it's too much of a risk. So this, in fact, limits the numbers of lenders for second homes, okay? Does this make sense? All right, so limiting the availability of money, and timing for that matter. For instance, on a local lender, I know this for a fact, when somebody comes in, they'll say, which one do I use? Well, it really depends on when and where you're buying. And here's why, because at certain points of the time, these small banks will have they got $10 million to lend. Once they're out of that $10 million to lend on a property, it's gone. Okay, and then they'll wait for more deposits to come in and then lend out. Or they don't want to over leverage. They want primary residence. They want this much in secondary. They have to have a balance of where their money is flowing from and where their comfort level is. So that's one thing that you probably don't know. I'm trying to let you know behind the scenes of what actually goes on. So what are the vacation rental finance issues? Okay, the real reason. Here's the real reason behind all of this that I've been talking about so far. You may have heard of two names, Fannie Mae and Freddie Mac. Now, what are they? They're government. They actually buy the loans from the bank and they fund. The bank actually is not loaning you all the time. They'll keep it on the shelf sometimes in their bank, but a majority of the time, that money is being sold. They're being funded by the government to take over the mortgage-backed loans. Okay, so when you're looking at Fannie Mae and Freddie Mac, if you go to a traditional bank and you're going in there as your primary residence, they'll buy that loan. The bank gets the money for it, and then they put it back into the system. It keeps on going, and they service your loan. They collect the interest from it. Okay, so if that makes sense. But here's what's changed. Okay, this has totally changed. Freddie Mac and Fannie Mae are no longer buying loans on condo or resort type loans from many of the banks. Okay, so Fannie Mae and Freddie Mac has tightened the rules on these high vacation rental areas all over the nation. It's not just in one area. Fannie and Freddie say that they want to shrink their footprint in these resort areas. Okay, so an example, you can get a conventional finance loan. If I went out and bought like an intercoastal condo or a golf course condo, but it did not have any short-term rentals. Now, this is truly a second home. There shouldn't be any issue there. But if I go into an area or a complex where, there's other condos in the building even, okay, that are being rented on a nightly, weekly, they're doing that, or a condo project, that's going to be disqualified from Fannie and Freddie finance. And does that make sense? And why is because they want to put their resources, Fannie and Freddie want to put their resources into what their core mission is, okay? It's encouraging affordable home ownership, as a primary residence or traditional real estate lending, okay? So if you've looked at all your options on a short-term rental building, okay, you might say, I got to go to plan B. If it has hotel-like amenities and you're in a vacation area, you might be doing that, okay? Some of these, like oceanfront condos, here's a really good example. So oceanfront condos, for the most part, are going to generate some of the highest gross rental income. So there's value in that in itself, okay? So for an example, if you have a condo that's on the beach and you have a condo that's somewhere else, can you get more money when you rent your condo on the beach? Absolutely, okay? So if you're, and here's another good one, if you are doing all the work yourself and you're doing it through like an Airbnb or your VRBO, okay, vacation rental by owner, and you're renting it directly and you're involved in it every day to day, all that income comes directly to you, okay? Straight to the bottom line, okay? I can tell you from personal experience, it can be very profitable, but you're going to have to put the work in for sure. Or there's other options. Another option, you can put that vacation property on a rental program, okay, where somebody else is doing the management of the property for you. So that's kind of like what I was talking about before, which is a condotel. It's run like a hotel maybe. They do the linen service, the cleaning, the turnkey. You get a statement at the end of the month. You get a check. So what is a condotel? That's a complex or a building of projects, and its primary focus is like nightly rentals. It has a front desk, and it functions like a resort. Okay, so this can affect the way your financing is. Okay, so that's one of those things I want to bring to your attention and let you know. As I said, I've got other videos on this channel that go into depth into a lot of these things, and check those out in the comments below. But this can affect not only this part of it, but it can also affect financing for single family homes in like a resort area, like even if you're doing Airbnb or VRBO. So this is why you need a local expert who has boots on the ground, knows the ins and outs of the vacation rental business, and knows which properties to look for and which ones to stay away from. Some condo complexes, you've seen this, you've been out there looking, right? Some condo complexes or even communities have tons of listings, and there is a reason why. Why do they have a ton of listings? Okay. Some buildings or complexes or communities, you won't see any listings for sale. So when you're shopping on Zillow or Realtor or Homes or one of these third-party aggregators of real estate, you're looking and they're showing you stuff, but it may not even be something on there that really is the cash flow machine, right? Why? The best properties usually aren't needed to be sold, right? They have high cash flow. Somebody doesn't need to get rid of those, okay? So aligning with an expert locally in your area, wherever you're shopping, is going to get you into those types of properties, or when they become available, you're going to be able to snap one of those up. And usually that's the way it works. You don't see them. And if they are, they're gone the next day a lot of times. So did you hit the subscribe button yet? Okay. I hope this helps you and gives you some insight into the back end of what we see, because my goal is to help you avoid the pitfalls that are costly. It's Jerry with Jerry Pinkas Real Estate Experts here in sunny Myrtle Beach, South Carolina. Wherever you are, whatever you're doing, I hope you're having a fantastic day, and we'll see you in the next video. Take care, guys.